Welcome to the Deep Dive. Today we're taking a look at London's super prime residential market. We're talking transactions over £15 million after what was, well, a really dramatic 2025.
Uh-huh.
And the data we've analyzed shows a market that has been, I think the best word is recalibrated.
Okay, let's unpack this. We're diving into the Bouchon Estates Billionaire Buyers Survey.
The one comparing the last 3 years of data?
That's the one.
Yeah.
And the source of this whole recalibration, it's pretty singular, really. It's the non-dom exit.
And when you say recalibration, what does that actually mean on the ground?
It means a massive shift, a
Yeah.
huge change in who owns these properties, coupled with, a new flexibility on price from sellers.
And this was all kicked off by a political trigger, right?
Right.
Anticipated policy changes.
Exactly. The result was that in 2025, something like 65% of super prime sellers were non-doms offloading their main London home.
65%. And where were they going?
The expected places. Lower tax jurisdictions like Dubai, Abu Dhabi, Milan, Monaco, Geneva.
So that exodus must have created a pretty unique market dynamic.
Oh, it did. It flooded the top of the market with these incredible, high-quality trophy homes. And they were generally larger properties than what we'd seen sell in previous years.
Even though the total number of deals dipped a little bit.
Exactly. And the key thing is, sellers were realistic. They showed a real willingness to adjust their pricing to actually meet the market. That kept things moving.
You know, there was an interesting strategic twist here that we found in the sources. Many of these departing non-doms didn't actually leave London completely.
No, they kept a presence, didn't they?
They did. They bought smaller homes, typically in that £7 to £10 million range.
So it was more of a strategic downgrade than a total exit.
A toehold, not a complete divorce from the city.
Right. So to understand that huge supply shift, we have to look at who was actually buying.
Who was on the other side of the ledger?
Well, this is where the market really changes from being purely tax-driven to what we'd call lifestyle-led.
So who stepped in to buy these trophy assets if the old tax floors were gone?
What's fascinating here is you have your established demand, the, ultra-high net worth individuals from the Middle East, from China, the U.S., that's still there.
The usual suspects.
But we're also seeing a really significant emerging group of buyers, particularly from Turkey.
Turkey. Why is that?
They're looking for London as a safe harbor, really, a way to preserve capital against some pretty severe economic volatility back home.
So what's the draw then? What is London offering that rivals like Dubai, where prices have been surging, can't match?
It's the long-term value proposition, and it's the non-financial things, too. London provides a stable global base and just an unrivaled cultural and educational offering.
And you can see that in what they're buying, can't you?
Absolutely. Their shopping list is very specific. UH&Ws are focused almost exclusively on fully renovated, move-in ready homes.
No fixer-uppers.
No projects. They want privacy, generous proportions, and they have a huge interest in developments that offer lifestyle services.
The pools, the gyms, the 24-hour concierge.
All of it. And especially those large, convenient single-floor apartments. They're buying convenience as much as anything.
Okay, so let's look ahead to 2026. Have we absorbed the bulk of this non-dom exit now?
It seems so. Supply is expected to stay high, but the pace of new listings should be much more measured.
And what does that mean for pricing?
The Bouchon Estates forecast suggests values might soften just a little more, maybe another 2 to 3% in 2026.
I imagine especially near those proposed mansion tax thresholds.
Precisely. But, and this is a key point, for the absolute best-in-class homes in places like Belgravia and Knightsbridge, we're expecting prices to stabilize.
Here's where it gets really interesting, though. London is now being viewed as offering compelling value.
Which is a huge change in perception.
It is. Because prices in rival hubs like Dubai and Abu Dhabi have risen so sharply, London all of a sudden looks like the dependable, secure asset again.
So what does this all mean?
That's the big question.
I think the main conclusion is that the super prime sector has shown this incredible resilience. It absorbed huge political and regulatory challenges through 2025.
It bent, but it didn't break.
Not at all. London is still a global safe haven. But it is absolutely being bought for different reasons by a new generation of owners.
People who prioritize that lifestyle and stability over, say, tax structuring.
Exactly. So the final thought for you, our listener, is this. Does this intense recalibration represent a new, stable baseline for the city's appeal to international wealth? Or is this just the calm before the next fiscal policy wave?